Bum, bum, bum.
Gather around for a story about the gypsy.
What's up, guys? How we doing? I don't know who's on. I don't know who's here today. If anyone's from Red Pill, what's up? So what's up? So I've just literally got one runner from here. It's absolutely where this can pivot and flip short. I'm just holding, as you know, I'm macro boobish. I am macro boobish. So I'm just going to hold a runner for Moonskis. My next objective, if anyone's actually listening, all the way up here, 29,000. It's actually 28,992, but essentially 29,000. That's what I'm anticipating price to go for now. So just looking for my models in alignment with bullish structure to play long. But in terms of our MACTS, which is my model, we've already hit 2x. So in terms of if it's fulfilling what I needed it to do, it's done. So anything beyond here is now Brucey bonus. If it wants to consolidate between 1.5 and 2, it can do that. Just consolidate inside of here. But the next objective would be 4x if you're holding Ranaz. So I've basically just got 1 micro left that I'm just letting go. Lamb to slaughter. Lamb to slaughter. If you want to ask me questions, you guys, you're inside Discord. Hop over to the YouTube chat so it makes it easier for me. So I don't have so many chats open. But we've gone right back into this, come back into the Aulian version, right? Off our Aulian version. To Aulian version to Aulian version. So essentially my trade. So yeah, I've just got a runner. Oh, it's currently at 909, but 920. Boom, 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 boom.
Okay, Steven's grounded and my dad shut off the internet and Steven's really freaking out.
Mom!
Okay, who decided it has to be 2 weeks? Mom! I swear to God, I am literally 3,000 nuggets away from the chaotic crossbow. Oh my God, that's freaking bullcrap. Like that, I'm literally the only freaking ranger on my team and they need me. I don't understand. Why does it have to start today then? He could have warned me.
Get out of the Hummer. Dad is going to kick your ass if you break that.
I thought that I would have whatever I want until I turn 16 and I don't have a good lot for me. myself right off the deep
Hey Squigs, how you doing, mate? How you doing, bud?
dying inside. I don't wanna lose my mind. I'm thinking that maybe I'll just sit back down and cry. I'm dying inside.
I just had flashbacks of this morning. My missus, she does like, she works in like a hospital setting. And I thought it was moisturizer that was in the bathroom today. So I thought we had moisturizer in there, brand new moisturizer. I was like, you know what? I'll lather this up, get it on the face. Absolutely lather this stuff on. Put it on my face, and my face is freezing cold. I'm like, what is going on? And then I actually looked at the bottle, and it's conductive gel. It's the stuff they put on like on your stomach before they do like ultra scans and stuff. My face is still cold. Come on, baby, kiss it. So if the current daily breaks essentially if we break this low at 697, I'm out. That's why my stop's at break even on my runner. But this is exactly where if it's gonna reject, it's gonna reject, right? Up at the inversion on NQ. In this instance, you'd be looking for, if you were short biased, I'm not short biased, I'm long biased. Just trading long until my market structure breaks that I'm looking to hold, and then just wait for the next day to see where price is. But at the moment, I'm macro bullish up until 28,992. So I'm just bullish, boobish. But I'm mindful of, in terms of TGIF on last week, NQ hasn't got back into the 20-30% range of last week. So if I ever trade TGIF, I trade TGIF on a Friday PM. All right, well, it didn't do it on Friday PM, which often leads to it doing it on Monday, which would take you back into here. And if you look at ES has done the TGIF on last week. So if anything, NQ is going to pull back into 20-30% of the previous week. So if we do break my current low, that's what I anticipate it to do, right? Because we've now completed the MACTS long, right? In terms of 2x, anything beyond here is now just extension up to 4, which is why I've only got one contract left. But if we break this inversion that we have here, well, this TS for me is already completed. So it's more likely to drive back into that 20-30% range of the previous week, which is going to take us all the way back into this hourly candle. So if any of you follow my models, there is an H1 to M5 all the way down on that low, which is all the way inside of here. It's also an if 2022, an old if 2022, which when price fulfills its objective becomes the draw on liquidity. It becomes the dole. So if we do break that, I'll anticipate us to end up around here today. So again, this is another option for a long. So this is my H1 to M5 model inside of here. So this candle's wick closed back above the sell side sweep. Inefficiently delivered M5 range. Look for a BIS inside of a discount. Only enter inside the SIBI at 62 and below, which will take you into this little section here. So if we did pull lower, I'd be looking inside the H1 to M5, and then your targets are simply just taking it back into the M15 premium on the X levels DR, right? But you know, if we're looking at where we are right now, if we're looking at this, what is an M15 DR bearish, we're up inside of a discount. We're in a premium on the hourly, and obviously we're in a monstrous premium on the monthly. So the principle of my long this morning was also in alignment with price going out 12%. Here on the weekly. All right here, 12%. So if we pull back, the next is down at 12% on the monthly. Again, this is 12% on the weekly. Get my words out. All right, so this DR. Right inside of here. So this is 12% on the daily, 12% on the weekly is going to put you in here, which is back down inside that H1 to M5. So if we do get a pullback, this is where I'd be looking for a long, if I had an interest in a long today, which I don't. Again. So my trade this morning is my MACTS model. There's our entry for those inside Red Pill who know how to measure it. And then we're projecting out of that 2x. This is a subordinate TS inside of here, in alignment with H1 inversion. Taking it back up to an H1 inversion at 2x on the MACTS long. Can you guys hear me all right on YouTube? I don't know if you guys can hear me. Can you hear me? Can someone just go like, yeah, I can hear you on chat. At least I know I'm not talking to myself. Oh, he's up, Mitch. Watch yourself. Yes, good, all good. See. So that's what I mean. It's exactly where if you wanted to play a short, this is where you can short from. Obviously, I'm long, so I'm just holding a runner. But if you wanted to play short, that's where you'd be playing short from. You've also got a little. You've also now got a. Subordinates, yes. So if you're short bias on, if you're short on ES, you wouldn't want to see price back above 154. For those inside Red Pill, 3 OBs, middle BISI that you'd be anticipating to hold if you were long at this point on that particular day. Once it breaks through, inversion. So the only thing I'd note is in terms of like schematics, we haven't really had a sweep pre-830. So my runner low is hella sus. Hella sus, my runner. My runner stop, basically. So the reason why I'm keeping my runner here is in case that wants to be the sweep pre-830, right? Which is in alignment with our inversion on the hourly. Okay, so this being the sweep pre-830, that's the reason why that's that could be essentially the low. Price doesn't need to take out that low. So if you were framing longs purely based on the principle of schematics to get in alignment with price, well, once you've got your sweep pre-830, you've now got your swing low to your high, look for price to return into a discount, right? So any of your models, whatever your models are, you'd be looking inside of here for a long if you were looking for continuation, right? But that would be on the principle, but that sweep pre-830 is a valid sweep. So where you do not want to see price go through, right? If this sweep hasn't achieved anything in alignment with your models, then you would not do that. You'd anticipate that to be swept out So price then fulfills its objective on the high, and then you get what is a New York AM session reversal. So up here, if you were trading short to come and crash through this, you'd be trading a New York AM session reversal, right? At which point, all you're trying to do is seek 50% of the daily range, right? Which is going to take you back down into 716. If you're trading a New York AM session reversal, then you'd hold runners beyond that. If you're trading a buy day, and this is your valid sweep pre-830, well, now you've got your swing low that you do not want to see price go through. You got your high. You got your price returning to a discount for continuation. Whenever I trade that, right? So this is the actual high. Okay, so you're right inside of here. If I'm ever trading that, I'm always looking to pay myself back inside the premium side of that. Okay, so all I do is I literally just flip that over because I know I'm late to the party, right? I trade in London. I'm from London, so I trade the London kill zone predominantly. So I'm usually in here and either holding runners or I'm done for the day. So if I'm trading in New York, I'm either looking at a New York AM session reversal, so price to fulfill its objective, which it didn't fulfill in London, i.e. getting up to 2x on our MACTS long, right? So price fulfills the objective in New York to then trade a New York AM session reversal, at which point I pay myself inside this discount if I'm entering right up here, if my limit is sat here, paying myself inside of a discount, holding runners to sweep out the liquidity, which hasn't happened at 830. If that isn't my valid sweep pre-830. You with me? Or I'm simply looking for 50% of the daily range. That is purely trading in alignment with schematics, right? Nothing else. Not even talking about models here. Just purely context. Or the alternative is to that is I'm either trailing my runners, right, from London. So if I have my valid sweep pre-830, I'm not anticipating price to go below that sweep at 830. So then all I'm doing is looking for price to come back into a discount, pay myself inside of a premium, hold runners to get to the objective. All right. At which point we can consider opening range breakouts, all that sort of stuff in terms of new projections, or price fulfilling its objective in terms of MACTS projection. Chat with me. Now, if I've not taken any trade whatsoever during London, what I'm analyzing is whether we have a valid sweep pre-830. That's it. And whether price has fulfilled the objective on the high. That is it. Those two things. So, if price hasn't fulfilled the objective on the high, i.e. I'm anticipating higher prices, and I have a valid sweep pre-830, I'm simply waiting for the high price to come back into a discount, pay myself back inside the premium side of that range, all right, holding runners to take out the high. If I'm anticipating high prices. If there is no valid sweep pre-830, I'm looking for price at the open to sweep liquidity at 830 if I am bullish, right? And then getting into my model on the low. As I've mentioned, my model's already fired in London, so there is no re-entry for me below this low. If it takes out this low, for me, we're going on a bit of a carve, right? But if I have my model which sits underneath liquidity before 830, I'm looking to trade that to then trade long. Right? Alternatively, I'm looking to trade the New York AM session reversal. So I'm essentially looking for price to fulfill the objective on the high. My limits would be sat here to then trade into a discount, hold runs to take out the liquidity, to sweep the liquidity pre-830. That is it. That is it. Those are the only two things you're looking at. And it is so goddamn easy. It's so easy. And like, if you could just overlay like a model on top of that, whatever your model is, I don't care what your model is. If you trade mine or whatever, I don't care. Like, just have your model, but overlay it with those principles, which are schematics. You're going to up your consistency so much. So if this takes out my runner, so if it takes out this low, for me, I'll be anticipating it to come and carve out all of this. My next area of interest would be down at 2638, 26392. Your stop placement would have to be below 366, so it's quite a wide stop. So all I would be looking for at this point in time, when price is here, right? If it takes out my runner and it doesn't want to move higher, right? So if price gets down here, I'll simply be waiting for the M15 DR, right? This is my indicator. So I'll be looking for the new M15 dealing range. Once this low is closed below, it will create a new dealing range, bearish dealing range. If it does that. Okay, and I'll be essentially, so let's just do a manual one. So let's assume that this is, that is the X level dealing range, M15 bearish when price gets into this H1 to M5. All I would be looking to do is trade price back into 62% of that DR. 90% of your positions would come off here. And you hold runners to take out the swing high of the M15 DR. That is it. So that's literally the only other thing I'd have an interest in today as a long. If we take out this low, which is where my runner is. So again, when price gets down to here, you'd want to be considering what's the time. Right? Are we in a London close reversal? Are we in a 130 Judas swing? What is it? What schematic are we utilizing? And you can use other things, context, all the other stuff we talk about inside of Red Pill, but those are things which would be going through my mind when price is down here. I'll be asking myself, what has price left behind on the highs to validate why price is more likely to lead back up into those highs? What's the reason as to why? Why is it going to do it? Right? Those things can be weak highs, i.e. inefficiently delivered ranges, where price hasn't returned to 50% of a swing. Inefficiencies left behind. Voids. That sort of stuff, mate. That sort of stuff. So this is like a classic example. If I took this trade and parlayed in right inside of here, so 26,771 is where I'd take lion's share off, right, just above this candle's higher. Okay, so even if you entered at 62%, right, which is 26,736, and you've just paid yourself there at 771, you've just taken 35, 40 points out of the market. That is a scalp. Right, you've taken 90% of your positions off, and you're just holding 10% for your final objective, right? That is like the easiest trade. Like, so easy. You know, so if you're, whatever your models are, I don't know what all of your specific models are, but you know, right inside of here, mitigation block, This is a breaker block. This is a BISI. That's a unicorn. So if you're trading standard ICT stuff, that's a breaker block unicorn. Right. Whatever your model is, you just need to be mindful that obviously you're trading outside of a premium. Does that make sense? What I've just said. Does that make sense? Yes, no. Yes, no. It's freaking awesome talking to yourself. Do you know that? So good talking to yourself. It's a lot of fun. I'm pretty sure this is why I burnt out last year. Talking to a computer screen all day. And obviously my lovely red pillars. Yes, but a lot to take in. It's yeah. With trading, there is a lot to learn, brother. You know, but it's like riding a bike to a certain extent. You know, once you have the core principles now, it's just a case of rinse and repeating. So again, at this point, you've literally just got your runas. Alright, so if you were listening to me and you did take that trade, knowing where my stop was, knowing where I would enter if I was looking to parlay in, well then you know where I would be taking my lion's share off. Hint, hint, wink, wink, nudge, nudge. And you know where I'd be looking to take price. But yeah, Raymond, to answer your question, brother. Well, no, you didn't really ask me a question. You just said you gave me a statement of fact. Yes, but a lot to take in. Amen. Now the thing is, that's all context, brother. That is all context. And I will keep goddamn saying this until I'm blue in the face. I do not care what model you trade. I don't care if you trade inverted fair value gaps. I don't care if you trade breaker blocks. I don't care if you trade moving averages. I don't care if you trade trend lines. I don't care what you trade. But if you have an absolute inability to frame context, you'll never ever be consistently profitable. It doesn't matter what model you have. Every model is 50-50. Every single fucking model. The only thing that makes it profitable is the ability to weight probabilities. The weighting of probabilities. Wherever you put that model in whatever stock, whatever indice, whatever you're trading, whether you're trading crypto, whether you're trading Forex, whether you're trading futures, whether you're trading stocks, whatever that model is, wherever you're placing it, you have to have context as to why you are going to deploy it there. So I have a model, I have models, but What I pride myself on is the ability to frame context. So the weighting of probabilities of where that model is deployed and whether or whether not I want to trade it or not. So what we've touched on this morning is a small part of framing context. Schematics. Schematics are repeatable market profiles. Your job is to figure out what is the current schematic in play and trade in alignment with it. And so there's certain rules that then govern how you trade that particular schematic. That's a tiny part of context. Other parts of context being inside of a discount when you want to be long, higher time frame discount, taking price back into a premium, moving price from a premium to a discount. Time, what time are you trading? Liquidity, inefficiencies, all of this stuff goes into context. What is the higher time frame narrative? What are the projections? Where is price leading to? Where is it going? What is it trying to achieve? Context. Once you have all of that, if your model that you deploy aligns with it, then you have a trade. Then you have a trade. Traders get it so wrong. They think, oh, I can just go on Twitter, X, whatever you want to call it. I'll learn this model through a picture that's posted, and I'll just repeat that. And then they wonder why they are inconsistent and they're unprofitable. Even though the quote-unquote guru is presenting all of these images of a specific model. If you take that model and you cut away all the shit, i.e. the context where it was working against its favor, and you only focus on that model where the context supported that model, that's where you get the 60, 70, 80% accuracy with any model. You can't have one without the other. You simply can't have one without the other. Right? So I always say to my students, context before time, context before price, context before models, context, context, context. Does that make sense? Thanks, I'm starting to understand that. Just need to grasp that. Takes time, literally. I can seriously see you understand this inside. Yeah, look, I've been trading for a long, long time, but that's not the point. It's completely and utterly learnable. You know, I'm not anything special. I'm far from it. I'm just a guy who works fucking hard. That's it. It's completely achievable. Completely and utterly achievable. Completely achievable. You just got to find something that resonates with you. You've got to find a model that you resonate with, that you're like, I can see that in the charts. I get it. I can see myself operating with that level of risk and reward. That's what you got to figure out. You know, whether you actually like the model. Like fundamentally, I love my model because I know that's what creates buy programs and sell programs. And my job is to trade in alignment with buy programs and sell programs because that's how the algorithm works. And I know what triggers a buy program and a sell program. So if I'm a believer in algorithmic price delivery. Okay? So if I'm a believer of algorithmic price delivery, I simply want to trade where the algorithm is triggered. An algorithm has a set of code that triggers it. I know what that is. So I trade in alignment with it. So I love my model. Okay? Other people, other traders, they might say, well, I like moving averages. They like using a lagging indicator. For some reason in their head, they like it. Okay, cool. What resonates with you? That's key. And I've traded a lot of stuff in my time before I landed in what I landed in. ICT fundamentally changed my life, and my models are built off the back of him. But I've traded breakouts, I've traded penny stocks, I've traded stocks, I've traded everything. What resonates with you? That's the first point. And sometimes that's a journey in itself. But once you find the model that you resonate with, that's the easy bit. All right? That's the easy bit. Learning the model is the easy bit. Right? Anybody can go, oh, there's a sweep of liquid. I'm just going to take anything for now. Let's take a breaker block. Oh, there's a higher time frame sweep on liquidity. Yeah, tick. There is displacement to the upside. Tick. There is a swing low, swing high, lower low, breakthrough. Okay, highest up close candles or series of candles. Measure that across my chart, breaker block. Now, if there is a BISI at that high, I now have a unicorn. Let's go trade every fucking unicorn in the charts. Right? That's the easy bit. Learning what a breaker block unicorn is easy. Takes 30 seconds. If everybody just had to learn a model, right, everybody would be successful. Right, come on. Let's get real with ourselves. Right, let's get real with ourselves. If it was simply just a case of learning a model, you wouldn't have to do anything. It's literally one Twitter post. Oh, do this, you're rich. Right, here's a model. Boom. Go get your Lamborghini in a couple of weeks. Right, come on. Come on. So we take the model is your vehicle. The model is what you're looking to set up in the charts, right? It's your vehicle. It's your vehicle for engaging in price. But if your vehicle, let's say you have depending on your model, I think my model is a Rolls Royce of models. Let's say I jump in my Rolls Royce of a model, but ahead of me, I see a volcano in the distance, lava spilling across the road. I see some crazy soldiers running at me with AK-47s and some battle going across. There's landmines in the road. There's a tree falling across it and there's a tornado in the distance. And I go, guys, let's go on a road trip. Let's take this Rolls Royce for a journey through that. Right? What do you think's going to happen to me? Right? I'm either going to get shot in the face. Not nice. I'm either going to get covered in lava and burned to death, or I'm going to get whipped up in a tornado. My point is, that's context. Now, if I get my Rolls Royce on another day, at another time, and I see an open road, clear blue skies, I know where price is going because probabilities are on my side, I'll happily jump in that Rolls Royce and drive along that course. Still knowing, at any point, a boulder can fall off the building, off the mountains, and smash me in two. Because no trade is guaranteed. No trade is guaranteed. Even if it is a clear road, clear skies, and you're driving a Rolls Royce, it is still not guaranteed. However, the probabilities, the conditions in which I am trading are weighted on my side. That's the difference. If you can simply take that from this session, and you genuinely adopt it, and you have a mindset where you just want to learn context, market structure, daily bias, premium and discount, liquidity and inefficiencies. You learn all of that stuff, time. That's the important stuff, guys. That's the source. The source isn't the model. Ciao with me. Yes, Raymond. Yes. Correct. Doesn't matter what vehicle you drive. Doesn't matter what vehicle you drive. You can drive a goddamn Prius down the same road. You're going to get the same goddamn objective. Whether you're driving a Rolls Royce or a Prius and the objective is $1,000, it doesn't matter if you're in a Prius or a Rolls Royce. You're still collecting $1,000, right? The only difference is the conditions which you're going to drive that Prius or Rolls Royce in. That's it. If I drive a Prius in beautiful conditions, it's going to get more likely, not guaranteed, but it's more likely to reach that objective and take the $1,000. If I drive my Rolls Royce in the worst conditions available, it's unlikely I'm going to reach that $1,000 even if I'm driving a Rolls Royce. Do you get my point? So the constant fixation on models, and I've been on that loop, guys. I promise you, I've been down that road where you're like, oh, this doesn't work, let's go and find another one, or there's got to be a holy grail model out there somewhere, guys. Right? I've been on it, guys. I've been on it. I've been on that roundabout. It's not the answer. The model is not the answer. Yet there is a massive fixation in the trading world of, oh, so what model do you trade? Oh, what's your model? What model is it? Who cares? Like, genuinely, who cares? It's not the important part. Sorry, AP, God, long time no see. Is there a video on reading context and understanding objectives? If not mistaken, I know when a schematic presents itself, that in its own gives us what to look for, but more context. Is there a vid? It's all inside Red Pill, bro. You're a member of Red Pill in terms of how to frame context. So you're looking at things like projections. So I can't do. It's impossible to do it in one video. It's genuinely impossible to give everything on context in one video. It's nigh on impossible. The first and probably the most important is understanding schematics. Okay, if you understand schematics, you can get an alignment with a daily profile. There's also things such as weekly profiles. So what is the current weekly profile? Again, that's a touch on context. There are cracked gaps. My cracked gaps which I developed. Again, another layer for context. There's projections. So MACTS, standard deviations. Again, context. There's being in a premium versus a discount on the higher time frame. Again, context. There is market structure within that. which is, again, context. So inefficiencies. Inefficiently delivered ranges, weak lows, weak highs. All of this is context. So whenever I look to frame a trade, time, what time is it? Right? So all of this goes into context, right? So whenever I have my model, all I'm then doing is weighing up the probabilities, the context. And there will always be, and I mean always, a level of ambiguity. Always. It's how the market is rigged. That's not the point. The point is weighting of probabilities. That's what trading is. It's not a game of guarantees. It's a game of weighting probabilities around a model. Okay? So the more positive reasons as to why price is going to deliver to my objectives, the better. But there is always going to be a negative as to why price will not. All I'm looking to do is weight the probabilities in my favor in an alignment with my model. That is it. Yeah. So it might be 70-30. There might be 3 reasons why prices could blow through my level, but I've got 7 reasons as to why price is going to deliver to my objective. Utilizing my model. So from where my model presents itself, there's 7 reasons: context, time, schematics, inefficiencies, liquidity, premium, discount, all of this stuff, as to why price is going to deliver to my objective. 6 sister concept with the MACTS, all of that. Which is why I trade very lightly during a day. I'm not trying to trade every goddamn swing because you don't have time to frame the context. Right? But this is like a beautiful example of schematics without any model. Let's be absolutely clear right now. There is no model here in relation to mine that we're overlaying here. So in terms of these grey boxes you see, that is purely schematic. Purely schematic. Okay? Purely schematic. So that gives you everything you need to know. There is no model there that I'm trading. It's purely a schematic. Context. This is not, these swings inside of here is not based off a model. It's based off a schematic. There is no, do you get my point? So the model is borderline irrelevant. The model is your vehicle. The context is what's going to get you there. Anyway, I hope that makes sense. If it doesn't, praise be. Oh, by the way, I felt really old today. Do you know what I just had to go out and buy? Yeah, I'm not afraid. I'm not afraid to say. I'm not ashamed to say it either. A nose trimmer. A nose hair trimmer. That's when you know you're knocking on a bit. Oi, 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 oi. Had to buy a nose hair trimmer. Oy, oy, oy. Oosh. Prius. Wouldn't catch me dead in a Prius, mate. We're waiting on news today. Can someone tell me if we've got a news event? It's hidden behind all of my streaming stuff, so I can't see. Have we got a news event at like 10:30 today? I can't remember off the top of my head. Anybody? Anybody? So we talk about the context this morning. I'm not looking to trade again. As you can see there, I'm just holding this position. But if you're looking at context today, for example, the reasons behind my trade, well, I know I've got a bullish hourly dealing range here, right? So immediately, the question I'm asking myself is, okay, so why is that low going to hold? Why would that low hold? It's the question I'm asking myself. It's a high time frame dealing range. Okay, so the discount side of that dealing range is right here. The premium side of that dealing range is right here. Okay? Price moves from a premium to a discount and vice versa. Aight? So, if I want to be long, I have to be long inside of a higher time frame discount. This is X levels. My dealing ranges. Very simple. If I want to be short, I've got to be inside of a premium on a higher time frame. Very simple. Very simple layer of context. But if you're trying to pump a long out of a premium, your probabilities are automatically reduced. There's conditions in which you can trade out of a premium, okay, on the back end of news events and when price is incredibly bullish and it's reaching for a higher time frame objective, i.e. daily, weekly, or an extension on a projection. If you're doing that, you'd still have to have context at that discount, that premium as to why you're trading outside of a premium. So why is price not going to revisit a discount? So i.e. do you have a trigger, i.e. S&T? Do you have M5 Cont, which is one of my models, right? M5 Cont Vary to support price going outside of a premium. You're thinking about second phase delivery of a market maker buy program on the higher time frame, albeit you're trading on a lower time frame. All right. So there are conditions in which it can go out of a premium. However, you would need the context to support why. But as a generalization, the higher probability is going to be outside of a higher time frame discount if I'm long. All right. So if I'm looking at the hourly dealing range, which is a higher time frame, anything M15 and above is a higher time frame, and we have an hourly dealing range here. This is the swing low of that higher time frame dealing range. So my question is, if I'm bullish, I want to be going outside of a discount. Okay, cool. That's all well and good. But I need to know why that low is not going to be swept. It can be swept, but what's the context behind it as to why it's not? So, if we look inside of here, we have 3 OBs. 3 OBs. Okay. 3 OBs is a high probability order block. Very high probability in the right context. We also have a swing low, higher swing low, and a high. This is a mitigation block. If you know your PVRA matrix, this is the first thing it's got to get through if it's going to go and flip through and crash through all of this. See? Okay. So we now have a mitigation block. And we also have 3 OBs. Now, if we have 3 OBs, I'm always looking at this middle BISI if there is one. There is not one, which is why I look at the BISI at the high of the 3 OBs. Note how this has got nothing to do with the model. Nothing to do with the model. This is context. So, price at the new weekly opening gap open dipped into that Miticorn. It's not a breaker block unicorn. It's a mitigation block unicorn. Okay, and I'm inside of a high time frame discount. All right. Well, all I want to do now, because I've now got the reason and the context as to why price is going to hold this low, is take price back up into a premium. Moving price from a discount to a premium. Seeking inefficiencies and liquidity in price. That is all the market is doing. So this big fat new weekly opening gap is an inefficiency in price. So, again, not a model, but context. I also can start framing the next step, which is a schematic. Well, if I'm trading in London, I want to see a sweep below Asia's low into a 15-minute order block or a breaker block. Well, as we've just mentioned, oh, Jesus Christ. Here, at the new week opening gap, we went back into the mitigation block. Right inside of here, we have a 15-minute order block. Underneath Asia. So if I am trading bullish in London, I'm looking for a sweep on Asia's low into a breaker block or a mitigation block to move price higher. Well, I have my 15-minute OB right here. Note how there is no model yet. Context. Trading in alignment with a schematic. Okie dokie. Now I'm in the situation where I'm starting to consider time. Right? Time. And my model. By the way, at no point has price come back into 50% of the London dealing range. That is a signal for shorts, by the way. If you're trading in your AM session reversal, London has never come back into 50% of the London dealing range. It is a positive for shorts to drive back into 50% of the dealing range. However, also in your AM session reversal, you're simply looking at 50% of the daily range, which we have achieved. Out, which is why it's sticky. Schematics. But with that knowledge, So automatically, I now know that I want to be bullish, taking price into a higher time frame premium, right? I've selected my daily bias. I've selected the direction I want to take price. I have my schematic, which I'm looking to deploy, which is essentially price long into New York for a potential New York AM session reversal or a buy day. All right. Taking it into a premium on the hourly. So this is my model chart. This is where I frame my entries and my models. Well, this is my MACTS model. So right inside of here is where you're long. Okay. Now we're projecting out our standard deviation, which you guys inside Red Pill know how to do. Especially those in my mentorship, private mentorship, up to 2x, right? That is determination of the model. If it is going to move higher, the next objective is 4x. But it has already fulfilled the objective of getting into the higher time frame premium, right? Which is all price is doing. Discount premium, right? If it's going to go and bust out this hourly high, right? If you're going to take out higher time frame highs or higher time frame lows, generally you need volatility in the market, i.e. a news event. Okay? So it's fulfilled that objective inside of a premium. I've literally just got a lamb to slaughter. I couldn't care less what happens to it. If it comes and runs out my runner, I couldn't give two shits, all right? But the context being that we had, on my model, an inversion on the hourly MACTS that is being left open. So if I was looking to be short, this is where I'd want to be short on the day. So this is where you'd want to be long. As I've mentioned, inversions act like stair steps. So now we have an inversion here. And we have a subordinate TS. That's all I'm looking for. And now I've got my projections. There's my model. There's my model. To engage with it. Okay? Taking price back into a premium. Right? Overlaid with everything else that I've just mentioned. So even if you were going to go into a New York AM session reversal and price fulfills its objective, which is 2x on my MACTS long up into this inversion on the high, which I said at the start of the stream, if price is going to go short, this is where I can go short from. So even if I wanted to be short, this is where I'd want to be short. Right? Paying myself back inside of a discount of the sweep pre-830 to the high, holding runners to take out this sweep pre-830, getting into 50% of the London dealing range, which is essentially going to take you there. Right? Which is 67275. Even if I wanted to be short, so short here, paid myself inside of here, holding runners. Okay. So right inside of here, if you were looking at short bias, you'd be measuring this on the 1 minute up on the high. You can take the 15 second if you want to dial it in. Okay, so if you're entering off that level which I mentioned, which is right here, so if you had your limit sat right in here, which is that 80350 level, same fucking thing. You're gonna pay yourself here. Right, which is where price keeps getting into. Right, so if you were short biased, you'd be doing this the opposite. Your next position, you're literally just holding a runner for here. If you were bearish, right, which is down at 6 675, which, funnily enough, 676.25 is going to take you to 50% of the London dealing range. All right, if it wants to bust out this sweet pre-830, which is a schematic. Okay. So even if you were short or long, trading in line with the context, you would have two trade opportunities for long and short. Now, we can take that exact same model and we can look at it in the wrong context. Okay, we can look at it in the wrong context. So where I wouldn't, an example of where I wouldn't be looking to take it. So, if you were inside of here, you see this swing high, right inside of here, you would have a bearish MACTS. Right, so you would have been going in here, taking this, right, inside of there looking to go short. So you would have been shorting inside of here. On the higher time frame, you would have been looking for lower time frame context for a short, essentially on this candle. So right here, at this inversion here, you got a slight pullback from it, right? This M5 inversion in alignment with the hourly. Okay, right here. But if you're a macro short, okay, so now look at this. That's the exact same friggin' model. The exact same model. Like I could literally take a screen grab and post that on Twitter and go, look at my model. Look at my model. Look how great it is. Right? But we look at it in the context of where it sat. Inside of a discount. We want to be long in a discount, not short. The same model. Does that make sense? You really don't need a model to trade. No, you need a model that is your vehicle that you know if you extrapolate over time is consistently profitable. Okay? So your model. Or you can have models, there's nothing wrong with having models. But the way that you deploy your model is purely dependent on the context that surrounds it. Where are you deploying that model? That's the key part. So yes, I always say the context comes before your model. But you still need a vehicle to engage in price. What is it that you're looking for? What set of criteria are you looking to enter at? In alignment with context. What is the model? What's the framework that you're utilizing to engage with price? Where are you, how are you taking your entries and exits? Where's your stop going? Where's your TP going? You still need a model in order to essentially extrapolate the data into yeah, I mean just have a framework to trade from, right? Otherwise you're just trading anything. You know, you're just pressing buy or sell. You still need a model or models. You don't have to have a singular model, which I think is again another fallacy, that you have to only have one fucking model. I mean, it's ridiculous. The model's not the important part. The context is, can you overlay a model on top of it, right? So yeah, but once you get the context, that's the important part. So again today, context, all context. The model is all the way down here and here. This is the, you know, the model entries are right here, right? That on its own wouldn't allow me to take the trade just because I saw this, right? If I posted that on Twitter and was like, oh, here's the model, it means nothing. You could literally plonk that anywhere, in any chart, in any index, any stock, Forex, this could be whatever. Right? This could be massively extended on a Forex pair. The exact same candle structure. Would I trade it? Hell no. Long, anyway. Right? Would I trade this long and a massively extended? No. In a massive, monstrous premium, would I? No. If it was premium across the board? Hell no. If it wasn't in alignment with a schematic? Hell no. If it was not at the right time? Hell no. Alright? But you notice how the model sits on top of the context. Okay, now we have something we can trade. But context is the bit that nobody wants to learn because it's long-winded. Come on, take my runner, you little shitbag. Forex is it's only $9. So 4x on the short is 676. So if I was short, my objective would be 676, which is 50% of the London dealing range. So I'm just going to move it down a touch to allow it to go to 4x on the short. Alright, which is this. So even if I was short biased, this would be my terminus. This is where this is essentially where I'd be terminating my short trade. If I was short biased, right? Again, if price fulfills its objective and you're in alignment with a schematic and this is your objective that you're looking for price to complete, which as I mentioned, if price is going to go short, this is where it can go short from. If I wanted to be short and you missed the entry, like you missed your limit sell, just wait for price to come back into the premium of that low to that high, short into discount, hold runners, take out the low, right? It's the opposite side of what I'm in. Okay? That's a New York AM session reversal. Alright, that's a schematic. It's got fucking nothing to do with the model. The model is this. This is the model. Okay? So in terms of that model delivery, the model delivery 4x is going to take us down to 676 on MNQ. 4x represents retracement reversal. So if it goes through 4x, which for me, I would be looking, if I'm looking for continuation on a long for my runner, I would want it to reverse off 4. It's also back in alignment with an M5 inversion. So That's why I just moved my stop down a squiggle. Plus I'm miles over my daily goal. I'm not really bothered about 40 bucks to allow it to hit 4x on the short. Allowing it to get down to 50% of the London dealing range. So just for clarity, in terms of my long, I'm simply holding for 4x. It's a lambs to slaughter. I don't care about the contract. I simply do not care about this contract up here. It's just because I'm macro bullish up until we get to 28,992. This is where I anticipate price to get to. Now, it's not to say that on a daily we don't get oscillations back and forth, but I'm just looking for bullish structure until proven otherwise. I'm looking to deploy my model in alignment with context that's bullish, which today took place in London, right? The context supported bullish price. My model presented itself in alignment with a bullish context. Okay, so until there's a scenario where that is no longer valid, that's all I'm looking for. So again, if I wanted to be long, again, I would need price to get back down into 20-30% of the previous day's range, which is essentially a T-GIF on the previous week. Okay, which, as I mentioned, one of my models is an H1 to M5, which would put you right down at 388. So essentially, I'd set an alert right here and just wait for price to get down here. I'd go walk the dog, go and do anything. If it takes my my position out, done. Right? I traded my model in alignment with context, took it to its termination point, held a runner. If it takes my position out, it's now going against my trade bias. Well, it's not really going against my trade bias because it's already completed what I wanted it to complete. I've literally just held a lamb to slaughter just for lamb to slaughter's sake, right? As I mentioned, if it was going to reject, it was going to reject up 2x. But if I wanted to be long again, I would have to wait for price to set up a new opportunity that has the context to support it in a different session, right? That supports bullish PA again. Utilizing the principles of price, taking price from a premium to a discount, seeking inefficiency and liquidity and price. So I'll be waiting for price to sweep higher time frame liquidity. I'll be waiting for it to get down into an X level. I'll be waiting for my model to set up, have time and everything else in alignment with it. So if you were short on this, this is where you'd want it to hold 2.5. So it's failed 4. It broke 3, but it failed 4. You'd be looking for 2.5 to hold. If it does that and it holds 2.5, it will completely violate 4. It will just blitz through 4 and it will go straight down through into 5. 2 secs. So it's a key moment here for this final contract. If it holds this 2.5, kiss goodbye that contract.
Similar to ridiculous, I'm living up to a beast status. Each average rapper can't even picture this. I'm so savage. Fucking with the mafia, you fucking with me, Mr. P. And ain't no way in this goddamn. You're stopping us now, gotta taste of the block. You don't wait in the top. And ain't no way in this goddamn. You're stopping us now, gotta taste of the block. You don't wait in the top.
There you go.
Order filled.
What did I say? What did I say? Holds 2.5. It's going to rinse for. So there's my day done. My day boxed. So congrats if you took the short off 2. Congrats if you paid yourself. If you took a long, you took 90% off. Back inside the premium, you simply utilizing the schematics to get in sync with it. Congrats if you decided to take a short with that high having achieved its objectives at 2x and you just wait for price to come back into the premium of that range on terms of schematics to drive out the low. Congrats if you measured out your subordinate TS on the high, projected out for 4x, paid yourself at 2x. Congrats. So you had numerous opportunities. So you had a long here, short here, short here. These were your opportunities. Yeah, I utilize RTH gaps. So RTH gaps, they have quad levels. So just like a fair value gap, there's a quad level within an RTH gap. Okay, so if we go and have a look at the RTH gap, there's just put this on 1 minute. There's gaps to an RTH gap, i.e. there's quad levels. So if we're taking this RTH gap, so from the close price up here to the open price here, okay. So if I'm not, here's the thing I look at. These are two things with RTH gaps that I'm conscious about. Whether one has filled and the other hasn't. Okay, so say for example, ES has filled the RTH gap and NQ hasn't. I would essentially be trying to deploy my model in alignment with context that allows me to take price to go and fill the RTH gap on NQ. So that would essentially be a sister on the RTH gap. The other thing that I look for with RTH gaps are quad levels with breaker blocks at either 50% or the upper quad if I'm bearish, or breaker blocks at the lower quad and 50% if I'm bullish, okay? Because that's where price can respect for a short. So if I am looking at a short and I'm looking at a breaker block at either 20% or 50% of the RTH gap. So essentially, here's your breaker block. So I'll be on the, and I do this on the 1 minute, okay? Because if you're taking this on the 5 minute, your opening price, essentially your accuracy on the breaker block that you're utilizing can be wide. I want to be really dialed in on the quad levels of the RTH gap, so I utilize the 1 minute for this. So essentially, you can see here you have this high, this low, this high. Now, lower time frame, it's not enough. You'd be asking yourself, what's it done on the higher time frame? So you can see you've swept higher time frame liquidity. So this sets up a high probability lower time frame breaker block. If you don't have a higher time frame sweeper liquidity, you don't have a high probability lower time frame breaker block. That's just a very basic rule. But inside of here, this would be your breaker block. Okay, but that breaker block sits where? It sits at the upper quad of the RTH gap, right? So if you now project this across your chart, so again, you know, this is it's another level of context that you can utilize. So again, when I was saying price can reject here, this is one of, you know, part of the reason. I mentioned this morning, well, if you look inside of here, you've got 3 OBs on the high. Again, high probability order block. So you've got a high probability order block, you've got a high probability lower time frame breaker blocks, you've got a higher time frame sweeper liquidity, and you've got the upper quad of the RTH gap, which is your point. Okay, so if we go back to ETH, well, we're right here, aren't we? Okay, we're right here. Okay, right here. So if I'm not anticipating the RTH gap to fill, that's what I'm looking for at either the upper quad or 50% of the RTH gap. That makes sense? Ring ding ding. So yeah, the only other thing I'd have an interest today is H1 to M5 down at 387. So if you're entering on this, your stop's going to have to be below 370, and you don't want to be entering in above 390. You'd be waiting for a new DR to form and essentially taking it back into a 15-minute premium. All right. But that's going to be for me. That's going to be me this morning, guys. I hope you found that valuable. I hope you learned something. See? Alright guys, take it easy. Have a good one on YouTube. If you're going to keep trading, have a good one. Red pillars, they done. Gonna go trim my nose. Oosh. Take it easy guys. Abush.